Hey guys, how's it going? It's Andy from MagooInvesting. Today we're going to be talking about what I think is the best deal in the stock market going into October of 2021. For pretty much all of 2021, the market has been relatively stable. And as a result, I've been taking advantage of that by buying into a leveraged ETF called TQQQ, which follows the overall market and 3 times as the returns. So with the stock market going up pretty consistently, I felt pretty safe in holding something like a leveraged ETF. This is not something that is meant to be held for the long term, because when you have leverage ETFs, they decay. And with some of the market volatility that we've seen in September we've actually had a red month overall. I have decided to sell out of that position. And with that additional funds, I had some flexibility in what I wanted to do with my positions. And on Friday, Nike came out with their Q1 earnings report of their fiscal 2021 year. And with that report, the market was not super happy with what came out. We're going to talk about why the market reacted the way that it did, and specifically what they identified in that report. That kind of spooked investors. The stock was down around 6 to 7% on Friday. And on that day, I decided to buy additional shares. I've been a Nike shareholder for probably 2+ years at this point. When I see an opportunity like this, I decide that it's too good to pass up. So in today's video, I'm going to talk about why I still love Nike as a long-term investment play, what I see on the charts, and why I think it will continue to fall further for the next couple weeks, but why I think that there's an end in sight, and what price target I'm looking at for a bottom to continue to buy more shares. Always have to say that I'm not a licensed financial advisor, and if you've been appreciating these videos and have been enjoying them, I really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. And if you throw a comment in there, it helps out the algorithm, and I really appreciate that. So with the stock market recently, I haven't seen a lot of great opportunities. I've made videos talking about why I thought Alibaba was an interesting play, and I'll link that above right now. But we have not had a lot of major blue chips take a hit recently. We've had some problems with the semiconductor shortage, which has pushed a lot of tech stocks, a lot of car companies down as well. But now we're seeing a company like Nike that had an incredible run. When he showed the returns by month, May was up 2.9%, June had a major jump after their earnings report, which we'll talk about in a bit, up 13%, July up 8%, August relatively flat, down 1.65%, and so far in September it's down a little more than 9%. It is still trading up on the year, up 5.7%, which is still very nice, and I decided to buy more at the $150 price point. And so let's talk about the earnings report for why the stock fell. And so with earnings, you have a lot of expectations. You want the company to beat revenue, beat the earnings, and improve their guidance. When you look at how Nike did on this past earnings report, they missed on their revenue. That's usually a huge hit. Earnings, not a huge deal. I believe they did beat the expectations for earnings, EPS, and they also lowered their guidance. And so I think the lowering of the guidance was the really big thing that pushed down the stock overall. And the reason that they lowered their guidance is that apparently they've been having problems with their supply chain problem, which has resulted in low inventory. They reported revenue of $12.2 billion, an EPS of $1.16, and they missed their expectations was $12.46 billion, and EPS of $1.12. So as I mentioned, a miss on the revenue and a beat on the earnings per share. And so they've had bottlenecks with their supply chain, especially going in places like Vietnam, which apparently have been having really tough times with the pandemic. And so when you have a major global company with so many moving parts to their supply chain like Nike, the pandemic is going to make things very difficult for them. And so I do think that this is something to watch going forward, but I'm not super spooked about this. Nike's had an incredible run from the last earnings report, and I think it was due for a pullback. From their last earnings report, I guess 2 earnings reports ago, back in June, we saw a major jump after that earnings. And from that earnings, they had, they had beats on earnings, sales records, and digital sales were up 41% year over year and rose 147% compared to the same period in 2019. If you've been on this channel for a while, I remember talking about Nike and having this be a major point of emphasis for their recovery during the pandemic. We wanted to see, with physical stores not being open, if they were going to be able to transition a lot of their revenue from the in-store, which is very common for something like a physical retailer like Nike, and see if they can move things to their digital side of their platform. And we've been able to see that they have been able to do this very successfully, 41% year over year and 147% compared to 2019. And they saw a boost in their wholesale business. This shot the stock up significantly. I believe Nike was up around 10% based off of that news. And with that, you get a major gap up. When I look at opportunities to buy or sell stocks, I look primarily at previous price movement because I think that's the best way to determine if a stock is a good buy or should be sold based off of how it's moved in the past. And a very common thing is that when you have a gap up, eventually you're going to have a gap close. What this means is that when the stock gaps up after good news, there gets a chunk on the chart that is not filled in. And it's a tendency of stocks to go back and close that gap. And after the earnings report, Nike had been continuing to push up to around $170. And with this fall, I'm waiting for it to come down and close that gap. And so I ended up buying at $150. I wasn't super aggressive with my buying. I bought a couple additional shares. It does add onto my cost basis because I've held it for so long. But the area that I'm really looking for it to reach is $134. This is the price that it was at before it gapped up from their earnings back in June. So with the market kind of being choppy and the history that we've seen with the overall stock market, where September has been traditionally the worst month when you look at returns from the stock market since 1980 based off of returns, August and September are the only two that historically have been on average red. And then we start getting into the fall and winter months, which historically have been very good for the stock market. So I think with kind of the worries about the overall pandemic, you have the worries with China and the supply chain, I think Nike will continue to fall further. I am not worried about this at all. I'm actually very happy about it. I wanted to buy additional shares based off of the major news, just because I'm always worried that the fear of missing out is a huge part about the psychological part of investing. And when you have a stock that you love, like Nike, fall significantly, I like to buy pretty much immediately. I don't love Robinhood, but I do like the fact that it does let you know that if one of the stocks you're watching falls 5%, it gives you a notification. That's how I saw that Nike was down and decided to buy in. I didn't even look to see what the news was at first. When you have a stock that you love, most of the companies I own in my retirement account, I'm going to hold for 10 plus years. I look at the earnings report to see if there's anything that would change my mind in a significant enough fashion that gets rid of the bull cases that I've had for Nike overall. When I look at this, I think it's a short-term problem. We've seen a lot of companies. I remember Elon Musk came out talking about Tesla at the chip shortage. He thinks is a short-term problem. And when I look at this similar problem, I think it's going to end up being a short-term problem as well. Nike has continued to boost their revenue. I'll put up that chart for their revenue. You see a major drop from the pandemic. And a year later, they have gotten to above their pre-pandemic levels for revenue. So they've seen incredible growth over time. They do pay a dividend. It's 0.7%, so it's nothing too crazy. But as the stock price continues to go down, the dividend yield will go up. It's something to take into account. When I look at Nike, this is not a stock that's going to have major moves. When you see a lot of people talking on YouTube about the stocks that they're looking to buy, they're looking at these super volatile stocks that'll have 10, 15, 25% swings in any given week. Nike, very rarely is that ever going to happen. Usually the big catalysts are going to be earnings reports. And so when you see a major move down 6 to 7% in a single day, I think of that as always being a fantastic buying opportunity. I love Nike for their long-term potential, and I'm not worried about anything that came out in the earnings report, even the cutting of their guidance based off of the supply chain problems. So I think this is a fantastic opportunity, and I'm going to be putting Nike at the top of my list of stocks to buy in October, just because I do think that the gap eventually will be filled. And based off of the trajectory of the market, which has kind of been down in the month of September, I think that's going to continue, and I think it's going to pull Nike with it after this bad news. It's going to be very interesting to see if the value investors, I consider myself kind of a value investor, buy this major dip from the earnings report, or if it's going to continue to slide. As I mentioned, I have $134 as my support, which would be closing the gap, and I'm going to continue to buy on the way down. If it falls through that, we'll have to make another video and talk about that. But after I buy in additional shares of Nike, I'm not worried if it continues to fall further. I will be a little bit worried if it falls below $134 because that would mean that something significant has happened, more than just an earnings report. So let me know what you thought about the Nike earnings report. Let me know if you think it's a buy going into October of 2021. And let me know what stock you guys would like me to talk about in future videos. If you made it this far, I really appreciate it. Hit that like and subscribe button, as it would really help my channel out a lot. And be sure to comment for the algorithm. Thank you for watching. I appreciate all support, and I will see you in the next video.